Good morning, everyone. Welcome to Daily Markets Outlook prepared by Windsor Brokers for Wednesday, 12th of February 2012. As we are aware, today is FOMC day, and the traders are basically warming up for something that is expected, a period of stronger market action and higher volatility as the Federal Reserve prepare to announce its next monetary policy decision. According to the expectations, the Fed is expected to announce basically a fresh round of bond buying on the second day of today's end of today's meeting. I do apologize, as a part of its efforts to support a fragile economic recovery threatened by political wrangling over the government's budget. The U.S. Central Bank looks certain both to extend its purchases of mortgage-backed debt and replace another expiring stimulus program with a new group of money creations. The policymakers are also likely to repeat a pledge to keep buying bonds until the labor market outlook improves substantially, as recent improvements shown on the most recent releases are seen as a mild recovery in the labor market. A drop in the jobless rate, to 7.7% in November from 7.9% in October was driven by workers exiting the labor force, a fact certain to disappoint the Fed. The economic environment still seems to be ripe for those at the Fed who support continued accommodation, are comments of some economists. And as its last program of treasury purchases, also known as Operation Twist, draws to a close, officials look set to replace it with a fresh 45 billion per month in buying, unlike those in Twist, which were funded by sales and redemptions of short-term debt. The new treasury purchases will further expand the Fed's $2.8 trillion balance sheet. And economists also expect the central bank to continue buying 40 billion per month in mortgage-backed securities, as announced earlier, I think in September, and keeping the monthly pace of total asset purchases at 85 billion, a figure that Fed highlighted in its last policy statement. As a result, the euro remains steady, following yesterday's release in the better than expected economic sentiment in Germany, and the regain of important 130 handle, and the current consolidation around this level keeps prospect for a possible further extension, further recovery after finding good support at 129 zone. Sterling is also well supported for now, as the pair regained the 161 barrier, and the brief consolidation of yesterday's fresh high at 161.21, where the pair nearly fully retraced the reversal from double top at 161 at 29 to 160. It keeps contained by 160 level. From the outside, the weak US dollar that hits its recent lowest levels keeps the upside pressure on the upside boundaries of the range of dollar yen, as the pair is currently at 82.80, attacking the upper limits of the recent range, poised to resume the larger rally from 77.12 mid-September low, with the break above 82.80, 83.00 required to resume higher. Dollar Swiss is still under pressure, as the important support level at 93.20, 93.00 is still under pressure. Basically, the zone has been cracked by break below 93.20, with still hopes of a possible recovery seen in case of 93.00 holding the downside, but quite negative tone seen on the near-term charts. Near-term studies keeps the downside at risk, and the possibility of further weakness is quite likely at this point. Commodities remain pressured, although gold is still in the recovery mode, awaiting today's Fed release, with the dips being contained at previous resistance at 17.05, and the fresh extension higher now again focuses 17.17 and 17.22. More clues will be given on the Fed's release, while crude oil is still under pressure following yesterday's dip down to marginally fresh low at 85.20, keeping the downside firmly in focus for now. From today's calendar, as we said, the Fed FOMC release is the main release today. Meantime, we have some other releases that are quite important. Unemployment rate and the jobless claims in the UK due at 9:30 are expected. Basically, unemployment rate is expected to tick higher to 7.9% from 7.8% in September, while jobless claims are expected to dip to 5.1 thousand compared to 10.1 thousand in the month of September. Recall German December final inflation on monthly basis came at expected and the previous level at minus 0.1%. Zoo economic expectations for December from Switzerland are due at 10 o'clock. We have no forecast. Minus 27.9 was the previous release. And a brief outlook on the crude oil inventories today due at 15:30, minus 2.6 million, draw of 2.6 million in crude stocks is forecasted for today, continuing the draws of the past couple of releases, with the minus 2.4 million release seen in the last week. Just to mention, 13:30 we have import prices from US monthly release for November, negative forecast minus 0.4% compared to plus 0.5% seen in the month of October. And then 17:30 GMT is the release of Fed's the fund rate that is expected to stay 0.25%, with the 1900 GMT time is the release of the economic projections and the federal budget balance, basically press conference and things when the most of all these things we discussed already will be released. So higher volatility, as we said, and more action in the market are expected on today's Fed's action, with the most likely rather quiet session seen in the Europe, as most of investors are awaiting the announcement from Federal Reserves to get the fresh direction from the technicals. Starting with the euro, as always, a regain of 130, also 50% retracement of the down leg from 131.25 to 128.76, and holding steady around this level keeps the upside in focus, though the hourly indicators are coming out of the overbought territory. That could be signal for some corrective action, although the 130.00 so far held the downside. 129.95 was the lowest seen this morning, with the 20 days exponential moving average on the hourly chart so far containing, but descending indicators and the lack of momentum could be a signal for some stronger corrective action. From the other side, the reversal of the stochastic sees still upside focused. At this point, I would say 129.60 zone is seen as a good 50-60 zone is seen as a good support. 129.70 is the initial one. This is the previous high of 7th of December, as well as 55 days exponential moving average, and basically holding above this level. Any dips should be contained ideally above this level in order to keep the near-term bullish structure of 128.76 and 129.00 in play for possible extension higher, where we have another strong static resistance at 130.30, 130.40, 61.8% retracement, and the previous low of 6th of December at 130.40. One break of which is to refocus upper barriers. Interim one is 130.66, 76.4% retracement, and 130.85 peak of 6th of December ahead of 131.00 psychological support. On the downside, a loss of 129.70 as initial support could risk further slide down to 129.40.50 below, which could be quite increased the risk of revisiting 129 and 128.76. Any reversal, any dips should be ideally reversed above 129.70 in order to keep the positive structure, as 4-hour indicators are in the positive ascend, all pointing higher, breaking above the midlines. That shows more room for further extension, as also the Bollinger Bands on the 4-hour chart are now widening, signaling a stronger action of the pair. The British pound also, as we said, maintains a positive tone following bounce of 160.00 last Friday's low, as the rally higher reached 161.21, nearly fully retracing the corrective pullback of double top at 161.29, 161.27 that was contained at 160.00, with the current consolidation seen around 161, 160.94 was the dip, corrective dip this morning, with the quick recovery still seeing more potential towards the upside, as the hourly RSIs, after emerging out of the overbought territory, now pointing higher. All the others are pointing, basically starting to point higher, as dips were contained above initial dynamic support at 160.87.55 days exponential moving average, and ahead of Fibonacci support at 160.75, which is 38.2%, and the more significant 160.60 is the 50% retracement low of intraday low of 10th of December, and the high of 7th of December, seen as a break point. In case of a reversal below 160.60, then bulls would be likely sidelined. So far, the positive structure remains intact, and the probability is still high of retesting 161.27.29 double top. That will signal, confirm the higher low at 160, and signal the resumption of the broader uptrend from 158.26. That's also the barrier also marks a 61.8% Fibonacci retracement of the down leg from 163.08 to 160.00, and will open next strong static barrier at 161.74 1st of November and 17th of October highs. That will come in focus in case of a clear break of 161.27.29 double top. There is also the alternative scenario in case of losing supports at 160.60 and another significant 160.40 that also marks 61.8%. That would increase the risk of triple top formation, as we have 161.29, 27, and 21. Of course, a break below 160 is required to confirm this formation. In that case, that could be quite bearish, and could be signal for some stronger corrective action. For now, near-term outlook remains quite positive, and keeps near-term focus on the upside, with of course focus at 160.60 and 160.40 supports that are expected to contain any stronger dips. The dollar yen wakes up finally from its range, attacking again upper barriers. We have seen a brief break above the range top at 82, 83, 82, 88 seen so far. As we can see on the ADX, hourly bulls are now firmly in play, with also the 4-hour charts bulls are gaining traction and speed that looks quite supportive for the pair. Both lower time frames indicate studies at 1 and 4-hour chart are now pointing higher, and see potential for final trust and break through range top at 82, 83 and the psychological 83.00 barrier. That will open way for a fresh further recovery. 83.29 would be next target, April's 2012 high, and then we have 84 as round figure resistance, and the yearly peak at 84, yearly highs at 84.08 and 84.17 posted in March 2012. Daily structure from the other side looks quite extended, and indicators already pointing lower. The MACD is at its quite extended position points, and the appearance of divergence in the MACD at this point could be a signal of possible exhaustion of at these points at 83.00. If we don't see the clear break above 83.00, then increased risk could be further range with the main risk seen on loss of range floor at 81.68. That would open way for a stronger corrective action of a rally from 77.12 to 82.88, 82.90 so far. And finally, dollar Swiss, that we said is extending its corrective pullback of recent peak at where we are at 90. I do apologize. At 93.81, testing a strong support zone at 93.20, 93.00 being cracked already. 93.12 seen so far. This also marks a 50% retracement of the rally from 93.92. Pardon. We are not exact at the point. 92.39 to 93.81, break of which basically break below the 93.00 as psychological support could be quite risky. Negative tone dominates on the hourly chart and still sees the downside vulnerable, with the descending 4-hour indicators and attempting to break below their midlines. That will be confirmed on the loss of 93.00. First 55 days exponential moving average at 93.14 and recent lows, and then 93.00 as a psychological support that would confirm the weakness and basically signal the lower top at 93.81 for possible revisit of downside targets 92.54 and 92.39 ahead of possible stretch down to key support at 92.13. With the daily studies still being rather negative, most of indicators are in the negative territory. Still downside remains quite vulnerable as formation of that cross of 90 over 200 days moving averages is putting additional pressure on the pair. We mentioned this in our yesterday's session too, and the break below 55 days daily moving average currently at 93.50 sees again increased pressure. In case of reversal above 93.00, then hopes for fresh strength would still stay alive, but regain of minimum 93.67 that marks yesterday's high is basically required to refocus upper boundaries at 93.81 and then a cluster of barriers at 94 zone, break of which is required to improve the near-term structure. 94 as around figure resistance. 94.07, 61.8% Fibonacci retracement of down leg from 95.11 to 92.39, and 90 where we are 94.15 is the 200 days moving average. If we see the break above these levels, then more focus will be turned towards the upside, and it will avert immediate risk of retesting the recent range floor at 92.39, 92.13, probably to shift focus up toward the upper boundaries at 95 zone. As we said, loss of 93.00 could be quite risky, as this would again refocus the 92.50, 92.40 support zone. As hourly studies are still negative and the 4-hour ones losing traction, most likely scenario would be attack at 93.00. Otherwise, bounce higher requires a regain of 93.67 in order to improve the near-term structure. And the gold is still holding the positive tone after corrective action from 1717 dipped to 1705. This is initial support and bounced higher, keeping the 1700 as psychological support level intact. Now, so far, break above yesterday's high at 1714. Where we saw 1715 already, keeps focus at the upside. Hourly studies are now positive, all broke above They are midlines with the 4-hour structure maintaining a positive tone, overall keeping bulls in play and focus at the upside. Break above 1717, that also marks a 50% retracement of 1752 to 1684. The sand is required to open way for stronger recovery. 1722, the high of 3rd of December 2012, seen next, and then 61.8% retracement at 1726. On the downside, immediate support 1704. Then we have 1702 Fibonacci expansion, 38.2%. Break below 1700 again. To mention is to focus recent double bottom at 1684. It's also close to 50% Fibonacci expansion of the down wave from 1752 as a part of the broader reversal from the yearly peak at 1795. As said, the near-term focus is still at the upside, and if we see the break above 1717, 1722, 1726 would come in the near-term focus. Of course, gold is also awaiting the release of Fed data today. That will give us a more clear picture. Crude oil holds weak despite OPEC's decision to reduce the output as fresh weakness hit 85.20. This is marginally fresh low in the late hours of yesterday, and then now quick recovery regains 86 handle, though we have still a good way up in order to improve the near-term structure. Barrier at 86.34, yesterday's high, and then more significant is 86, 80, 90 levels, peaks of 10th of December and 7th of December, Friday and Monday highs, with the hourly bulls now gaining pace, and the indicators in the 4-hour chart starting 2 point higher, while hourlies are already above their midlines. Overall near-term tone is positive, but a larger picture is still holding a quite negative tone as the oil price reversing of 90.31 channel resistance dipped below the channel support at approximately 86.00 and tested the interim supports at 85.35, extending to 85.20 ahead of 85.00. That will open way towards 84.00. Recent low of 7th of November, and the current consolidative range base. The structure on the daily chart is still quite negative, and sees the downside more vulnerable and sees more focus towards the 84.05, loss of which is to signal end of this consolidative phase that was limited at 90.31, and open way for a fresh extension of the down leg, down move, downtrend. Let's call it from 100.72 mid-September high, and the focus will be at 93.64 and 83.64 and 83.00. Any break above barriers at 86.90, basically regain of 87, where is also the 55 days exponential moving average on the 4-hour chart, is to provide the near-term relief and probably to signal some recovery action. But as long as we are standing below 88, 88.50, this could be described as the corrective action. That was all from me for today. Now you can submit your questions if there is any question regarding today's session. Okay, it seems that we have no questions for today. Anyway, since no questions, then we will conclude the session. The Arabic one is going to follow in a while. I would like to thank you all, as always, for being with us, and expect to see you again tomorrow, where most likely we'll have a lot of things to discuss regarding Fed's decision that will be released today. Meantime, keep an eye on especially on the Fed's release tonight, and of course, good luck and profitable trading, and as well as a nice day to everyone. Good luck.